As we await earnings from FedEx and Nike, though, let's break down today's market action with BD8 Capital Partners CEO Barbara Doran and Morgan Stanley Global Chief Economist Seth Carpenter. It's great to have you both here. Barbara, I'm going to start with you because we really failed to hang on to gains here. X the Dow, which finished up, it looks like maybe 15 points, so fractionally higher today. What does that tell us about the state of the market after the dramatic pullback we saw yesterday, the spike in the VIX, and the move higher in the 10-year Treasury yield?
Hey, Morgan, it was a dramatic move, but we've seen this a couple times this year, most particularly in August. And in each of the cases, it's been a buying opportunity, but it takes a few days to calm the nerves. Because when you look at what has really changed, yes, the Fed is going to stay higher for longer, but I think that was pretty well telegraphed. You know, I think people may have been expecting they'd talk about 3 cuts. Now they're talking 2, maybe it's 1. But the fact is the economy remains very strong. And you saw that this morning in the GDP revision, the final revision up to 3.1 versus 2.8%. You saw in the retail numbers recently reported. You saw the initial jobless claims holding steady, no, warning signals there. So you've got a strong economy, and that means good things for earnings next year. And that's what, will support the market. But in the meantime, there will be choppiness. We do have uncertainties in terms of policy with tariffs and immigration, whether that will be inflationary, but we don't know yet. And we will know that hopefully sometime in the first quarter and start to take that into account.
Seth, I want to get your thoughts on what we did hear from Fed Chair Powell yesterday and what we saw in the forecasts, because inflation really seemed to take on a lot of attention as we got a more hawkish tilt here, even in the midst of the cut yesterday. It looked like, it's a drop from 3 down to 2 in the forecast for 2025 now. So a Fed that's likely to stay higher for longer. What got my attention, though, around this, and this was particularly true in the press conference, was the comments about some policymakers, some decision makers factoring in the possibility of higher inflation tied to fiscal policy. That seemed a little unusual to me. I want to get your thoughts.
Yeah, it is tricky, and we don't have such big sweeping changes in elections, so we don't have a huge sample to compare. Chair Powell had said when they make actual decisions, they don't sort of act prospectively about what might change with policy, but when they write down their own projections, each of them gets to make their own judgment about what the likely outcome is. From my perspective, and I completely agree that the starting point for the economy right now is on very solid footing. And so we are in, as much as ever, a wait-and-see mode where the Fed has to see the data coming in to see what happens. I think there's huge uncertainty about how tariffs will be implemented. Are they going to come in all in one fell swoop? Will it be spread out over time? I think that matters a lot for what it means for inflation and what it means for growth. I'll add in there, though, I think the Fed, as well as a lot of folks in markets, underestimate just how negative for U.S. growth the tariffs are. So it is an inflation story, to be sure, but there's a big growth story as well that I don't think enough people are focusing on.